I'm excited, bro. I
Me
am.
too, bro. Me too. We about to definitely get this going, bro. I'm gonna explain why this is gonna be a better way of trading. Because one, you're not gonna get faked out a lot. Two, you're gonna understand where the market is going without um, you know, just guessing. All right, and we're gonna be going over just some key things about like why support and resistance may not be as real as they say it is. Right. Um, so here we go. Let's look at Euro NZD first. All right, cool. So here we go. So this is exactly what the market wants us to visualize, right? We have support right here, right? Boom, right? Price comes down to this area, we buy, stop loss below here, right? We buy, stop loss below here, stop loss below here, and we're gonna keep getting kicked out because support and resistance. I'm gonna show you what true support and resistance is. All right. So the way that we're taught us support and resistance may not be. We have to change our paradigm, right? Because what happens? We can have a ceiling and it gets broken through, and then now we're thinking we're gonna buy, break and retest. Psych falls through.
Got it. Right, bro.
Boom.
Sit down.
Feel me? Okay.
Mm-hmm.
So this is that loop strategy, that breakout retest. You feel me? But now you're not even getting that many pips. How many pips are you getting? Okay, 100 pips. That's cool. Okay. But now, the way that we're going to look at this, bro, is going to be a totally different perspective.
So
All
can you
right.
put the resistance at the resistance to support right around November? What is that, like November 1st? Around that? Now you on the right side.
Oh, November
It's that.
1st.
It's the lowest low right there. You
Okay,
mean the
good.
lowest low where it's consolidated? Yeah, right there. That area,
All the way at the
right?
bottom or like at the top?
Yeah, all the way at the bottom. Yeah, you right there. So like, say if you put your support there, and you like, all right, but I know it's going by, and say you bought it right there. You hold it all the way till it get back to the its highest high, which was the like that resistance area.
Because right. Something that the market likes to do is seek and destroy. Right.
Right.
The banks want to make people lose. Right. So what does it do? It starts to target where people's stop losses would be. Right. So if I sold right here and I'm swinging this, my stop loss is going to be right here.
Right.
Boom. What happens? This gets taken out. So now the reason why I'm telling you about this seek and destroy is because yes, my target would be this high, but I'm gonna go a little bit higher because I know that it's gonna go higher. I know that it's gonna go past this last high. You get what I mean?
Yeah, absolutely. So like, my thing is, you would really hold that, John. Like,
yes.
I mean, only reason why is because I've been telling myself, like, the analysis that I make, they usually go for 150, but I always take, you know what I mean, at like 80 or 90 because I want to secure my pips. But like, I really do want to work on staying patient and actually hold my trade to see it fall all the way through.
Facts, and that's something that I'm still learning to this day, bro. Of holding my trades because being like an intraday swing trader, bro. There's there's a lot to there's a lot of emotion involved, bro. We gotta hold our trade. We may get like a massive pullback like this, and we're like, oh my god, but it still goes his take profit. You know what I mean? So I do get what you mean, bro. Um, but I get what you mean about holding it, and that's exactly why I want to teach you this way of trading is because this is going to teach you to not only understand the market a lot better, but be confident that the market is going to go in that direction. You get what I mean? All right.
Absolutely.
So this is what I want to show you. So we have our quote unquote support and resistance right here. Right. I'm going to explain what true support and resistance is right now, but I want to give you the strategy that we're looking at. Okay. And then boom, we have this resistance here. Okay, so this is going to be my consolidation area, all right? And now I understand that price broke out below. But now understand, typically, if we go lower than our last low, we're going to retrace up to here and keep going lower, right? But what happened? It broke out to the high. So it made a new higher high, okay? So now we were going in the direction of down, up, down, but then we broke these two highs right here, and then boom, what happened? Right? We start, yes, we did, get a retracement down about 50% and then go a little bit higher than this.
And it created a new higher high.
Right? So now this is just an example of a change of direction in the market. Right? Because we cleared the low and we cleared the high. So now we're gonna start going in the opposite direction. Right? You'll see it all the time. Right? So now what we're looking for now that we have this change of direction is we're looking for the last significant sell candle where then you see a big buying output, right? So look,
is it my phone?
Go ahead. Keep ask your questions, bro. Don't hesitate.
Yeah, so you personally, right? Cause I know what I would do, but you personally though, once it broke that support, right?
This right here.
What would you have done?
I would have waited because I know that the market is gonna go back up this way in some time.
You knew it was gonna do that regardless.
I know it's because anytime it goes lower than a lower low, it has to retrace back up. It has to, right?
You have to respect the market.
Exactly. I mean, yes, it could have still kept going down a little bit, right? So what I'm going to do is I'm going to wait for some confirmations, okay? And what I mean by that is I'm going to go down to the smaller time frame, right?
Mm-hmm.
And this is exactly what I'm doing, okay? I see that, okay?
All right, sorry too.
I see that we have this getting built up, all right? So we have this right here that's getting built. All right, and what I mean by getting built is that accumulation of price, accumulation of liquidity is getting built in these areas. You have you have sellers up here, you have buyers down here, right? Somebody has to lose in the market, right? Somebody has to lose in the market, and then we have our support right here, right? This is our support. But what happens to our support? It gets liquidated, right? It gets faked out. So now I understand that once I see that price is going back up this way, I'm gonna be straight. All right. But now this is what I'm looking for, okay? Because I understand that the last sell to buy candle, right, is that bank move, right? You have banks pushing it down and then pushing it all the way back up, right? So I see that they have this big significant candle that pushes through. Right, I don't see any entries right here, so what I'm going to do is I'm going to go on the lower time frame. Right, I'm going to go on the lower time frame, and now this is where we can start to work with something. Right, now we have a engulfing candle. Right, now we can see that okay, price clear liquidity came right back up. We have one engulfing candle, two engulfing candles, so you could have played off of this one or this one. Right. All I'm looking for.
Once I see it bounce off that support, absolutely.
Right. So all I'm looking for is the last sell to this big buy. Right. So then I can go ahead and I can start using 50% of these candles and get my entries. Right. Here we go. 50%. Boom. That's my entry. Look, I'm gonna show you why. Look, I'm gonna show you why this should be so crazy, bro. Look, I'm gonna just show you a couple scenarios based off of these the 50% of these candles, right? So here we go. We got this 50% right here. Stop loss. Look, we can be realistic and we can put stop loss right here. We can put a 14 pip stop loss, right? Okay, and then we can also go ahead and play off this. So this didn't even really reach 50%. But it still came into this candle. So we're going to go ahead and boom, and stop loss would have been right here. So that's about a 7 pip stop loss, right? So
can you break this down a little bit for me? Because I ain't gonna lie, like I'm not too hip about
I got
the
you.
50%.
I got you, bro. I got you. Let me finish. Let me finish with the explanation of why I trade like this, and I
Okay.
got you because I didn't used to understand this shit at all either, bro. You know what I mean? So boom. So now we have a 200 pip move on Euro NZD,
I'm so majestic.
right? But now we have a 7 pip stop loss. Our risk to reward is a 28.73. Understand how crazy that is. That means if you risk 1% of your account, you're gonna make 28.7% of your account. Understand that if you risk 2%, I think that's like 56 or something like that.
Yeah, 56.
56 some percent of your account, just like that. And let's say that you took this entry, you got a 15 risk to reward. So regardless of what other trade you took, you're still having a very high risk to reward. That makes sense, right? So now let's break this down into why I'm looking at 50% of the candle, right? So who really controls the market right now?
The bank institution.
The banks, okay, and the institutions and the hedge funds and stuff like that, right? So we know that the banks are in the market, right? These big candles like this, these are the banks, right? These big candles that's, pushing through support and resistances and stuff like that. These are the banks, all right? So now, anytime that we see a very big, significant, sell candle, and then we have a big, bullish run, that's going to identify as a, institutional candle, right? So what this means is that you have banks placing high orders right here, clearing liquidity to take you out because they need to make money, right? But what they're going to do is they're going to leave these sell positions open. They're going to leave these sell positions open that cleared all this liquidity, and they're going to place buy orders down here and make this market literally basically no retracement, just continue to skyrocket up. Get what I mean? But now, what the banks are going to do is they're going to have to come back down to where they place these sell orders so they don't lose. You get what I mean?
Absolutely.
So now we have this last significant sell candle right here, right? That gets retraced down to, boom. And now what happens? This is how we start to get our waves in the market. Now you can start to see lower low, boom. Now we created a higher high. Now we have a higher low. Now we have a higher high. Now we have another higher low. Now we have another higher high. Boom, just like that. And this is how the wave sequence starts to move. You get what I mean? So just to understand so you're asking me like, how do I know that the market is gonna continue to go in that other direction?
Yeah.
Right. Okay, so that's the thing, like you do know but you don't at the same time. You get what I mean? Like,
yeah.
Before this happened, before this wick got cleared, right? I was expecting price to go back up and then come back down, right? But we always have to think about seek and destroy. Where is people's stop losses at, and where does the banks want to take you out of, right? Because now look what happened. Once these stop losses got cleared right here, you had what? You had a massive output. You had a massive push up, and then now you have a bullish engulfing, right? And now this may potentially start to come back up into this last buy to sell candle, and we can start to see this, push down just a little bit.
So we're not standing real quick, bro. So in this scenario, right? Say if you get that sniper entry, you know what I mean, that huge imbalance candlestick that's to the left, you mean that huge draw that starts it off, right? That draw right there.
Right.
Say if you get a sniper entry, you hold it until when?
Well, shit, this is the thing. So I have to give you a more realistic standpoint.
Right, and that's what I'm asking for. Like you personally, like what would you do? Because I know there are some swing traders that will try to hold it till it reaches that certain level.
Yeah. So this is how I'm holding it. So I know that I'm on a downtrend, right? And I know that downtrends have to clear the last low. So what I'm targeting is this is basically how I do it. So this is how I do it. So I get my fibs, right? And I'll go if I'm selling, I'll go high to low. Boom. Right? My take profit could either be this low or it could be this extension right here. Right? And now this is gonna be confluent with this big ass imbalance right here, this last sell to buy candle right here, right? So I can just go ahead and place a line right there. And because now this may not be an entry point for me because I understand that price can still go lower than this. You get what I mean? So this may be just a hazard point for me, right? Because I still, if I believe that price can come down into even these levels, I can still target this right here. And then this is going to be confluent from this imbalance right here. You know what I mean? So this is how I'm looking to target. What we like to call it is seek and destroy because I know that stop losses are down here. We still haven't gotten into a retracement of our imbalance areas. Boom. This can be my overall, like honestly, this right here could be my overall target all the way down here. Right? But to play it safe, I'm either going to play it here or I'm going to play it here. Or if I just want a quick trade, I'll probably just put it at this imbalance over here. This last sell to buy candle right here. Boom. And then this will be my quick take profit when I'm in and out, right? Because I don't like being in trades for, months. You feel me? I could be in trade for weeks, but then again, the reason why, I have such a small stop loss, my risk reward is a 21 risk reward. So I'm okay with just taking 150 pips off you, Chef, right? So now how I'm getting these entries though, right? So we talked about take profits and where I'm looking to target at, right? Because look, this was liquidity built up, stop losses are below. What happened? If I caught this sell right here, if I caught this sell right here, I would have went lower and targeted these lows right here. Boom, this would have been my take profit somewhere around here. Boom, easy. Okay. But now this is the thing about it though, because it takes practice to understand what are the legs, right? So this leg is going to be from here to here, right? Not from here to here, because I made a mistake and thought the leg was from here to here, right? And
the leg is just the downtrend, right?
Yeah, it's just that leg before you get a retracement,
yeah.
Right? But we got this last buy to sell candle, and then boom, it cleared that wick, and like how I'm looking at this is I see that this is a singular wick right here. Every time you see a singular wick on a higher time frame, it's weak.
Expect to go the opposite way?
No, it's weak. It's weak. More than likely, price is going to continue through it. Right? But then you see this candle right here, that's significant. Right? We can get down on the 30-minute. I think it's 30-minute. And boom. You can see that we have, we can do the 1 hour. We have this last buy to sell candle, 50% of that, because I know that. So the reason why I'm going 50%, let me go in detail of why I'm looking at 50%. Okay, I know that banks are placing entries down here to go higher, right? Would you rather go break even on the trade, or would you rather at least get some profits?
Let's get some cheese up that job.
Right, some profits, right? So If my entries are down here for a buy and I'm in all this drawdown, I want some profits, right? So I'm gonna go a little bit higher, but I don't want to go so high that my sell entries are gonna get taken out at break even. You know what I mean?
Run that back for me, Warner.
Okay, so let's mark this up like this, right? Let's mark this up like this. Right, let's make this blue, right? So I have entries down here, right?
Entries for the buy.
I'm a bank, right? Yeah, I have entries down here, right? But I also have sell entries up here, right?
Okay.
Now I understand that overall we're on a downtrend, right? But I'm gonna fake people out by placing this high buy, or I'm gonna be placing very big buy orders, right, at like a quote unquote support, right, to make it think like we're gonna buy. But then I'm gonna continue to put sell entries, sell orders, right? Boom. Now I push it down. My buy orders, because I'm a bank, I have all the liquidity basically all the liquidity in the world. I have unlimited liquidity. I don't need to have a stop loss on these buys. You know what I mean? So boom, so I could wait until price comes back and puts me back in profit, and then I could take my profit on the buy, and then boom, this is why we get this big snap in selling momentum, because you still have these sell entries right here. You know what I mean?
Absolutely.
And then now this is what we like to call institutional trading, because you see these big candles, are going, crazy. Okay, and now you can start to analyze and take entries off of these candles.
Yeah, don't you think that it's more like smarter though, for instead of just always trying to get the sniper entry, just go with the wave?
So that's the thing about it. Like, when you gotta know where the wave is gonna start to understand to get these sniper entries.
Right.
Right, and this is why I'll use fibs, because I know that we have a sweet spot of a 7.1 to an 8.8 percent of retracement of this leg. So I know that this right here, anywhere from here to here, I can look to enter. But I'm really looking like,
to get the sniper.
Yeah, I'm really looking like right here. This is exactly what I'm looking for. Every time. Right? So now, if I understand where the next wave is going to start at this last buy to sell candle, not only can I get a sniper entry with a very small stop loss, but I can also catch this whole wave and make a lot of pips off of that, right?
Mm-hmm.
And now, because I know, God darn it, because I get a good entry, and I know where the market is gonna go now, right? Because now this candlestick pattern is telling me something. This candlestick pattern, while I have this big snap in price, is telling me that sellers are in momentum now, right?
Mm-hmm.
So now I can start to look at this leg right here and start to look for entry, so I can get on a 15-minute time frame, right? And I can really start to look at this, right? I can pull my fibs up if I want to, and I can go here to here to find like a better entry point, right? Or I can just go ahead and find the last buy to sell candle, right? And we can go ahead and enter off of here. right? So let's say that I missed this entry, but I saw this big engulfing candle. I can. This is exactly what I'm doing right here. And boom, stop loss right above the wick. We can make it 6 pips. Boom.
Now, so how you get the 6 pips though? If the market all the way down there, you talking about if you were to wait for the bar back up and enter?
Exactly. So I'm waiting. I'm placing a sell limit or something like that
at the 1.
Yeah, right there at the 1, right? Because I could place it up to 50%, but I don't want to miss it. You feel me? It's not, I don't have FOMO or anything. Like if my whole entry got missed, then I wouldn't care. But we're just gonna play it. We're just gonna play it like that. So right now we're at a 10 risk to reward, right? And then boom. Now we're at 25 risk to reward with this trade, and this trade we're at a 21. So let's say that you risk 2% on both trades. Matter of fact, let's say that you risk 1% on both trades, right? You're literally making, what's that, 46% of your account literally on this one trade. For me, and now all I'm doing is just letting it run. I can go do whatever I want while just letting this thing run. You know what I mean?
Absolutely.
And then now same thing. And now if I'm really feeling like aggressive and like I really understand where the market is, and like I can understand and predict where the market is gonna go, we can really hold this thing to here, right? And we can have a 43 risk reward and a 36.5.
Yo, that number that's to the right where it says amount, is that how many pips, or is that 262? That's the amount of pips that you can catch.
Yeah, so that's the 262 is the pips. Yeah, so, but now, the thing about the pips, like, I don't even really care about the pips. It's more the fact of how big the stop loss is and my risk reward.
Mm-hmm.
You get what I mean? Because I could, let's say that we did catch this move for 150 pips, but let's say that I lost 3 trades that had a 30 pip stop loss. So I just lost 90 pips, and I made 150 pips. So I'm only up 60 pips on the week. But let's say that I lost 7. I lost, how many was it? 3. I lost 3 trades with a 6 pip stop loss, right? How many is that? 3 times 6 is what? 18, right? And I hit 150 pip TP. Right? I'm still up 132 pips. You get what I mean?
Absolutely.
The risk reward ratio is what I really want you to focus on, not really how many pips you catching, because I could go ahead. What was I looking at? Oh, I'm about to show you some crazy shit. Euro NZD. I think it was Euro NZD. We can look at this on a smaller time frame. Right here. Let's see. Boom, right here. Here we go. Right. So let's say that we took this entry right here. Right. 50% of this buy to sell candle right here. Right. Let's say that we took this entry. Right, because you can use this and play small ball with it and still make hella money. Right. Let's say that we call it a 5 pip stop loss. Right. But now, let's say we take this high out right here. Right. Let's say that we just want to get this retracement right here. Boom, 30 pips. You still have a 6 risk reward. You get what I mean?
Mm-hmm.
So like, you can still risk 5 pips, get 30 pips literally in 30 minutes, and you just gain 6% of your account, or even 12% of your account if you risk 2%. So like the pips really don't matter. It's more about how big my stop loss is. You get what I mean?
Absolutely.
And if we really playing aggressive, we could have put our stop loss below here. Right? Now we have a 9 risk reward. Crazy. 3 pip stop. Look, this is exactly what I'm. Look, support and resistance comes from imbalances. Look, let's delete this real quick. Let's go on 30 minutes. It's gonna look a lot cleaner on the 30 minutes. Boom. You got. Boom. Support, resistance. It's resistance, resistance, resistance.
Resistance.
Liquidity.
Right.
Liquidity is all right here. All right here. This is gonna get cleared. Probably gonna trade into this last sell to buy candle, buy to sell candle. Boom, we're gonna be lit.
So you plan on carrying it? Like once it does get to that level, you plan on getting that?
Hell, but I'm gonna get in. I'm gonna hold it until it clears this low.